All right, so thank you all for joining us for our Bridge Builders Academy session tonight. I'm really excited for this session. We're going to be kind of talking about building and accessing and understanding credit, which is something that I feel like a lot of times I hear people saying, oh, well, they didn't teach me that in school. We didn't hear about it. We don't know about it. Well, we are bringing this session to you today. So I hope y'all are able to get some good information out from our partners with Citizen Bank, who is presenting for us. And I will go ahead and turn it over to you all.
All right. Thank you. And thank you, everyone, for letting us join you today on a beautiful evening. My name is Osama Sayakator. I'm a high school relation manager for Citizens. We're also joined by one of my amazing colleagues, Andy Tran, who's going to be providing some more insight, especially on the home buying side of things. But before we get into today's presentation, if you have any questions, please feel free to put it in the chat. We'll be happy to answer them at the end of the presentation. I know that during the presentation, we'll also leave a little bit more room for people to ask questions. So just be on the lookout for that. But overall, right, as Ms. Sims mentioned, this session is designed to help prepare students and parents by providing information to help them understand the basics of credit, so that as you move forward in life, you feel comfortable with the information. All right. I'm usually joined by my other colleague, Kate Walsh, but she took the vaccine recently. She's reacting to it. So we decided to give her the night off. But when I think back to, when I was a senior in high school, when I think about credit, I remember being so unaware of what goes into a credit card, the importance of building a strong credit early in your life and career. And now, a couple of years later, I now have the pleasure of teaching people, the kind of knowledge that I wish I had when I was their age. And then, Andy, I don't know if you wanted to introduce yourself. All right, we'll hear from Andy later on. But let's start off with credit, right? And I'm sure we all know what credit means, but to be formal, credit basically allows for a good or a service like tuition, room and board, etc., right, to be purchased in lieu of immediate payment and paid over time. And so we usually ask ourselves, what's good credit, right? Now, to answer that, we have to think of credit worthiness. And by definition, from a bank's perspective, it's being able to demonstrate your ability to pay, and that you have the income to pay back what you borrowed. And then there's willingness to pay, which is basically, that you pay your bills on time as agreed. And so throughout today's presentation, we're going to discuss a couple of things, and we want to make sure that, you get some of these common terms down. So the first common term is credit bureau. Now, credit bureaus collect information about your ratings to make it available to those who need the information. And it's given to those who need your background information, like, where you may live and things of that nature. We'll talk a bit more about it. But you usually need this for a certain application, whether it be for your job, whether it be for insurance, loans, and housing, which once again, we'll get into later on. But they don't actually lend the money or offer credit. They're just a reporting system. So you may think of Equifax, TransUnion, Experian, right? Those are all national credit bureaus that you probably have heard of, and they are in charge of those reports. And then there's credit reports, which are the actual historical information that was collected by these bureaus. So information gathered from these credit reports basically help predict how likely it is that you will repay a loan and make the payment when they're due. Also, once again, let's think back to our willingness to pay, right? Your willingness to pay is what shows up on your credit reports. So information on your credit report would include your address, your history of employment, your billing information, to get into details like how much you pay, as well as the length of time your credit has been established. And then, of course, you can't forget how much you owe. And then finally, there's a credit score, which is the most important number. It's compiled from all of this information, right, that was on your credit report, and it influences your ability to finance major life events. So you could think of a credit score as a kind of, let's say, rating system, right? Where lenders basically use your credit when you apply for things like loans or credit cards. And the rating is going to help them decide whether to approve your application and maybe used to help decide, your credit terms or the rate for the loans that you've been approved for. And as I say all of this, look, we know that you want to be in control of your finances. We are growing up in times of financial recessions. We just saw it last year with the pandemic. Um, well, we're still in it, but definitely of 2020. People may become more adverse to debt and try to avoid it altogether. But the result of doing that is that you may miss out on the opportunity to build a strong credit history and those sound financial habits that you're going to need as you move throughout life. Okay, so ultimately, building and maintaining credit is critical to achieving your financial well being. And in the application with a higher credit score, it's more likely to get approved for credit or insurance and may offer better terms too. So, overall, it's important to start establishing your credit and taking a mindful approach to protecting your credit to help you reach your future goals. All right, now, as I say that, also, you may wonder who's looking at your credit. So bank and lenders, they're not the only ones that are going to look at your credit score throughout your life, whether it be you're getting your first home, you're turning your gas, or you're paying for electricity, getting your own cell phone service, purchasing your own insurance policy, everything, right? And even landing a job too. That can trigger a credit check. So an application to borrow, that's going to cause a third inquiry, which will give all your credit history and details that impact your credit score. And basically, even though those are soft inquiries, they tell a story about your responsibility with finances, or maybe a lack of credit history that has no story at all, which is going to potentially get in the way of where you need to be. So, soft credit checks, right? They're not visible to companies, but the hard credit checks are. So, this means that a soft credit check won't impact your score no matter how many of them they are, while each hard credit check may lower your score. So, an example of a soft credit pull would be like, just searching your own credit report, or if a company uses your credit report as a part of an identity check. But a hard credit inquiry, that can happen when you apply for credit, when you apply for student loans, or if you apply to a utility company. And with knowledge, I'm sure you've all heard this before, comes power. But unfortunately, an estimated 70% of young adults have never checked their credit score. In fact, they're often surprised. You could be surprised that they may already have a credit history and may not even have a good one. So getting started early is very important. It's not that hard to do. You can do that as easy as going to annualcreditreport.com and requesting free copies from all three major agencies. Once again, like Equifax, Experian, and TransUnion. And why all three? Well, because each one could have different information based on where the creditor reports their transactions. And some people may have heard of apps like Credit Karma, right? Which can seem like a nice, fun place to look at your scoring. But the best advice is to really do a yearly check through your annualcreditreport.com because that's going to make sure that there are no surprises. And it is important to manage your credit and carefully review it. You want to review your credit reports because your credit score will be influencing your ability to once again finance major life events. Okay, so under the federal law, once every 12 months, you're actually entitled to get a free copy of your credit report. So I repeat, you're entitled to get a free copy of your credit report from any of the nationwide credit reporting agencies. Once again, that's Equifax, Experian, and TransUnion. Once again, all you need to do is just go to annualcreditreport.com. They also have a number that I won't go into detail, but I can put in the chat. But as I say all this, you want to be careful, right? You want to be careful of other free sites that are advertised because I'm sure we all see a bunch of them, but they're likely trying to sell you a subscription-based service, which you may not want or even need, and they eventually are far from free. But once again, here's a good way to use your free annual credit report to your best advantage. Every 4 months, order a free report from a different credit reporting agency. That way, throughout the year, you get somewhat of a varying perspective on what lenders are reporting about your credit history. And if you've never checked them before, perhaps best to obtain all three in the first year. All three in the first year. And then, they can make a difference once again on your critical life events. You want to check your reports before you apply for a new job, before you apply for a mortgage, before you apply for that next big loan. And the way that, we can take action before that key decision is made is, if let's say if you're denied a loan, we have the right of access, right to request a free credit report as well. But that is a little late. So overall, you want to check your reports for any errors. If there are any errors, you want to dispute them with your credit reporting agency. Some errors are easy to fix, some are more serious than others, but just have the conversation started, right? Don't be afraid of debt, but just overall try to understand it and prepare yourself for good debt and investments in your future. All right. So, real quickly, here's an example of what a credit report may look like. It's going to have a record of where you live, any prior addresses that you may be tied to. It would include your employment history, your billing information, how long have your credit reports been opened, as well as how much you owe. And then you may also see any information if you've ever been sued or filed for bankruptcy or even changed your name. But like I mentioned earlier, the biggest piece is that you're checking for discrepancies. You want to make sure that all the credit cards listed are yours. Because if you find something that does not line up with your records, you want to report it to the bureau. And the reason why this is so dear to my heart is I have a friend, and he has a pretty common name. And one day he checked his credit report and he noticed that there were some accounts that didn't belong to him. And after doing some research and actually disputing these accounts, he realized that somebody with the same exact name was mistakenly added to his report. And so, right, you can imagine the situation wasn't malicious. It was just a simple mistake. But that simple mistake could have been very detrimental to a score. So that's why you have to check your reports for things like that. All right. And so here's a scale of average credit scores. Basically, these ranges, they help you see, whether you're in the classification of poor, good, or excellent. I'm sure many of you have already seen, your credit scores by now. But overall, we know that a borrower with a credit of, let's say, 720 applying for a loan secured by collateral like a car or house, they're going to be considered to have excellent credit. While the same borrower applying for an unsecured loan, like a student loan, may be considered to have good credit but poses more of a risk. So the average national credit score is a 706, but it's no surprise that most young adults have a much lower average of 634, and that's typically just because they haven't had the time to build it. But the takeaway is the higher the score, the lower the risk, and the better loan terms people can offer you. All right. And so now let's finally get to what is a credit score made of, right? So the first thing is a payment history. And payment history is responsible for 35% of your FICO credit score. And as I continue, FICO credit score, just a brand name that most lenders use, but others may use a custom score. So back to payment history, right? While it's mostly determined by on-time payments, it can also include things like length of payments, the amount that was owed at the time, and bankruptcies. So making one late payment over 30 days can drag a credit score down as much as 90 points and even more, and could show up on your report up to 7 years. So quite simply, making at least minimum payments on time is the best way to boost a credit score. Now, one way to make minimum payments is by using auto payments. I know that probably sounds like common sense, but you'd be surprised how many people do not take advantage of that feature, myself included, until recently, and I had to learn the hard way. So make sure that you're taking advantage of those auto payments. And then 30% of your score is influenced by credit utilization, and that's determined by your total debt compared to how much credit you have available. So this would include, number of accounts, the amount on each one, the percentage of open credit line in use, and how much is still owed on installment loans. Now, there are some experts that advise people to keep their balances lower than 30% of your total amount of available credit. So, in simpler words, right? Let's say for every $1,000 of credit line or limit, try to avoid using more than $300, right? That's 30% of 1,000. And so Just make sure that you're paying attention to that because it can sneak up on you. And then length of credit determines 15% of your score. So that's like how long has an account been opened? How long has it been since that account was used? And the reason why that's important is that, you have to utilize your account regularly and you want to keep your oldest accounts open to show the length of history in use. And then your amount of new credit, that's going to determine 10% of your FICO score. And so credit factors that play into that would be, the positive credit information on a recovering credit report. Let me break that down. So in other words, it's like actively using a credit card and making timely payments on an account that was used to make the late payment. And then you'll also have to consider how many and what accounts have been opened in the past 6 to 12 months and how many credit inquiries have been made recently. Because if you think back to what I was mentioning earlier, whenever you're making a credit inquiry, you're applying that hard credit. If you remember that hard credit, it can bring your credit score down. So overall, applying for too much credit too quickly can have a negative impact. And then finally is the last 10% of your score, which is impacted by, the mix or variety of credit accounts, such as revolving lines of credit. I won't go into detail on that because we'll talk more about that later on. But just overall, right, creditors want to see people with a healthy balance with reputable institutions. And so now let's actually put it into practice. All right. Let's say we have, and this one kind of more so applies to students in school. And I know we have more of parents, but let's just try to put it into perspective, right? Let's say if we have two students, let's say they attend the same school, they're going for the same degree at the same time, everything is the same. Maybe they like the same ice cream, I don't know, but everything is the same. But the only thing that is different is that one of them had a credit score of a 780 and the other had a 660 credit score. Now that difference of 120 points is going to make an impact, right? You can see that the student to the left is going to have to pay over $11,000 more for the very same education, and that's just for 1 year. So you can imagine if they stay on the same track over the next 4 years, the difference will be as high as nearly $12,000. Right. And so I'm going to take a pause now and see if we have any questions. I also want to turn it over to my colleague, Andy Tran, once again, so he could provide a bit of expertise and advice on, how, the impact of credit when it comes to home buying.
So, hello, everyone. My name is Andy Tran. Earlier, Osama was asking for, if I would say something, but I had trouble finding the microphone location. So, I'm Andy Tran. I've been with Citizens for 5 years. In terms of doing this every day for the past 20 years as a mortgage person and also as a mortgage manager here. So, just kind of continue on, Osama, regarding to having some of the credit types. There are credit mixes in terms of an individual can obtain. There are two basic category of consumer credits, revolving credit and installment credit. So I kind of mentioned to a lot of common sense here are what are revolving credit? Can we use repeated for two purchases that we can pay back on a monthly payments? Though paying the full amount every month is not really required, but you can. The most common form of revolving credits are credit cards. Um, there are installment credits is used to finance specific purpose through a period of times, like furniture stores or buying a new car. Um, Consumers are required to follow a regular payment schedule, which is fixed payments in a certain time to be paid off. A car loan typically you would have 5 years. Every month that you could pay 60 months, and by the time you pay 60th month, your payment will be paid off. That would be in a form of installment loan. Um, Education loans, like student loans. Like I was very fortunate to apply for a student loan for my son, who is a freshman in college. Luckily that he has a father that knows this, so I actually built his credit before he even got to college already, before he gets in there. Um, Typical interest rate for installment loans varies by lenders, right? That's perfect demonstration here, Osama. So a credit card could be one. What you see there is an acronym of HELOC. HELOC is typically called Home Equity Line of Credit. And it's typically for people that actually own a home that's typically can pay it off. They can tap into the equity of their home to finance for payments, for whatever expenses that may be incurred. Installment credit would be a mortgage, education, student loans, or car loan. Now, I'm gonna kind of speak in terms of very quickly in terms of how you can manage this, and I'm gonna go off script a little bit. I typically recommend that if you really want a revolving credit card, you tend to stay within the 3 credits that you have. One is for usage daily, one is for emergency, and then one for the backup of the emergency, right? So 3 credit card, and then the other piece would be a car loan or new home or something of an installment loan nature. If you need to go borrow for credit, then you should be able to have a plan to pay it off. So that the scopes of revolving credits or installment credit there. Everyone here, I just want to make sure I can speak to that aspect, and I can actually speak all day long about these 2 categories. It's actually all day long, and it continues. So there you go. I'm going to go right back to you, Osama.
Thank you, Andy. Thank you. And for those once again that have joined us, if you have any questions for Andy, please feel free to put it in the chat. He is local, and so he's always happy to continue the conversation with you all, especially those that are looking to once again buy their first home or just understand a bit more about managing their credit. All right, and so that leads us to our next slide, which is building credit. Right, so while being irresponsible with credit and amassing too much debt is harmful, let's remember that it's important to have a story of financial responsibility, to tell a lender, employer, or even an insurance company. And it pays to not entirely shun debt, but overall find healthy ways to build your credit history so that can set you up for success. And the key, once again, is to start early and build slowly. So we have a couple of ways where you can do that. And so the first one is, if needed, using a qualified cosigner for that installment loan, like Andy mentioned. For the younger people that are going into school, that would be like a student loan or a car loan, and getting that approved, and potentially you can get a better rate. And then having a partner in that responsibility. So once again, think back to like when we explained the difference in rate when using a cosigner and how that can really save you money in the long run. But then you could also get a credit builder loan or secured loan. And so typically the money you borrow is held by the lender in an account and not released to you until it is the loan is repaid. Securing your credit card with a reputable creditor and using it for regular purchases, right? Paying that balance each month can quickly get your revolving credit history started, like Andy mentioned. Or you can get a credit secured card backed by a cash deposit where you've made upfront, which matches the credit limit. And then once again, for any younger listeners, if you're not eligible for your credit card, for your own credit card, you can always look at a family member that may be willing to add you as authorized user. Andy mentioned that he did something similar with his son. The thing with that though is that this impact can be positive or negative based on the primary user's management of debt and payments. So if you're doing great with your credit, then your child's credit is also going to go up. But if you're doing bad with your credit, it's going to go down. So just be careful of that. And then also be sure that your credit card administrator reports authorized user history to credit agencies. And then lastly, it all goes back to credit report monitoring, right? Being aware and watching for any discrepancies can avoid issues, and seeing positive movement can be engaging and ultimately build confidence. I found in the chat that Ms. Sims is saying that twins tend to have issues when it comes to, some of their reports being a little wrong because their names or things of that nature are being mixed up. All right. And so how do we now keep that information secure? right? Now that we've built up our credit and we want to make sure that we're able to keep our credit score as high as possible, right? When you check for any errors, you want to be, once again, careful that everything is listed as yours, because there's fraud and identity theft out there. And I know that as we all move on with these times and we get a little bit more adverse to scams, we tend to think we're invincible, but they're becoming more and more common. Careless disposal of personal information, falling victim to scams, and using insecure internet sites are major contributors, right? Identity theft states use your information to open new credit accounts in your name. And then when you don't pay the bills off, that delinquent account is reported on your credit report. So, as I say that, avoiding identity theft is a lot easier than trying to repair the damage. Victims of identity theft are responsible for proving that the accounts open do not belong to them, and this process can take years to clean up. Protecting your personal information by, just being extremely cautious can save you that trouble. And you just want to be, once again, careful of who you share information with. Then there's fraud. It's a little bit different. That's when someone uses account that legitimately belongs to you, right, without your knowledge. So if this does happen, you're going to need to dispute this fraudulent charge with your lender. TransUnion and Equifax, they have their own process for disputing credit reports, but Experian provides three methods for submitting disputes ultimately, right? That's online or by phone or by mail. And once the dispute process is completed, any changes to your credit reports can lead to changes in your credit score. Despite this, although most credit cards actually come with fraud protection, so just make sure that yours does. The best way ultimately to stay aware that your account is still safe is checking your credit card statements. Most people do not do that. It's going to be good to use if you want to prevent, your cards from being stolen or misused. All right. And so, common ways that people commit identity theft. I know it's easy, once again, to think it'll never happen to you, but reality is it can. A blank slate of no credit is just as sought after as an already established credit, right? So it can happen to you, it can happen to your children, anyone. But not to scare you, it's just that one way to really divert, one way that they tend to divert mail is to send it to a criminal address, right? By then gathering your personal and financial data. An example of that would be like a thief changing your address to theirs. They may be digging through your garbage can. They may be going through public dumpsters in search of canceled checks, credit cards, and bank statements, or even pre-approved credit offers. I know I'm one of those people that tends to just throw those things into the trash as soon as I get them without even ripping them up. But you want to be careful of that, because that is one way that thieves can use your information to open new accounts in your name. And then another common one is just straight up theft, right? Deliberately stealing your mail, computer, phone, purse, wallet, anything that may have access to your personal information, or simply stealing key documents such as your driver's license, social, or birth certificate. Then there's a little bit of kind of sneaky stealing. I don't know if that even makes sense, but like someone secretly watching over your shoulder, right, to see what password or other personal information that you may be using out in the public. Even talking out loud on the phone, right? There may have been a time where you were on the phone and you were ordering a piece of pizza and you said your credit card number out loud, right? Just different things like that you want to be careful of, that sometimes just goes over our head. Especially when we're in public, we just want to make sure that we're very careful with our information. And on that same note, right? Sometimes when we're outside, we want Wi-Fi, right? We don't care what Wi-Fi our phone connects to, as long as we have access to our precious internet. But thieves can actually use those public hotspots to intercept your data and then upload malware. Another way is social media. Okay, so I know that on social media there are quizzes out there and little games or whatever the case may be that may ask you, oh, what's your favorite pet? I mean, your first pet. What's your favorite album, high school? Things like that may be part of a quiz. Be careful of that, right? So it's not that the quizzes are bad. It's just that when once you put that kind of information out to the internet, it is out to the internet. Anyone could get it. And so those answers can become you. All right. So scammers may be able to get that kind of what's your favorite album and then use it as a way to get through whatever passcodes you may have had. And then on that same page, you want to ensure that your devices are up to date. I am one of those people that always click update later, update later, update later. It's not a good habit, right? Those updates are usually built in with new upgrades that will get through some of these bugs and make your devices more secure. And the last one that you're probably familiar with is getting that email or text that looks legitimate, but may ultimately send you to a fake site. We have an example here. This one is through Lehigh University. Um, and so I'm going to break down what looks so wrong about this one, right? But ultimately, there's phishing. And phishing is where scammers basically make a clever looking email, looks like it's coming from a legitimate source. They may add pictures, they may add headers, but there's a couple of ways to look through that, right? And in this example, it has a school address at the bottom, but there's other red flags on this email. So when in doubt, question it. And there's going to be two things you want to do. You want to check it out, right? So if you have any concerns about an email, look up the sender's email address, phone number, or website yourself by simply using Google, right? Most importantly, just do not click on any link that leads you to another site or ask you to log in. When you do that, you could be giving your username, you can be giving your password, your other personal information to scammers, while also potentially downloading malware onto your device. And then the second thing is take a very, very, very close look, right? Some phishing emails may look legit, but they may have bad grammar. They may have some spelling errors that ultimately may tip off that this is phishing. So in this example, one red flag would be like the sender's email address, right? If you look at the end, it says at uc.pt. I don't know about you, but I have never seen any email address that ends with PT. So that's one red flag right there. And then, if the address doesn't match any address that you may have received from someone that you know, a company that you've worked with, a school that your student may be going to, it's most likely a scam. So the most important thing is to just look at the link. And if you look at this link, you'll see that it says www4. I've never seen that either. Maybe I'm wrong, but I've never seen that. And then the last clue that this email is fake, and especially once again for those that may have students in school, in college, is the wrong department name. So in one example, we've seen scammers call themselves the financial department instead of the financial aid department. All right, and so I say all that not to scare you, but overall, there's ways to protect yourself. So we've mentioned already you want to monitor your credit report, and that's free. It's an easy way to stay on top of your credit, top of your credit. But one way to guard your physical information is invest in a shredder. Shred that personal information. Do not be like me and get those pre-approved letters in the mail and throw it right into the trash. Rip it up. Do your best to get every little piece of information into bits and pieces. And this would also include your credit card offers and bank statements. And then keep in mind what you have in your wallet, right? Of course, you're carrying around your license and your credit cards. It makes sense to do that, right? But just consider leaving that social security card or that passport at home unless you need it. And always keep duplicate copies of important documentation, with the chance that something could happen, because it's always better to be safe. Other things to look at, though, would be like a credit lock or a credit freeze. So credit locks, they're not governed by federal law, but it's an easy access to unlock quickly at any time. It's free with TransUnion and Equifax. And there are some monthly costs and waiver requirements with Experian as part of their multi-service package. But then there's credit freezes, which are governed by the federal law. So it's basically saying that, if you want to thaw your credit, that requires direct authorization. And you would have to do this with a lender inquiry. It's free at each bureau, and I would recommend it if you know your information has been compromised. All right. So hopefully that provides you all with the information you need to, once again, stay safe. And before we get to Q&A, for any of you, once again, that may have a student in college, we have our scholarship that is out there right now. It's for high school seniors as well as those in college. Parents can sign up for it as well, doing a monthly prize of $2,500 and a grand prize of $15,000. You only have to apply once, and you're always in the running. But overall, we just want to say thank you. We understand that Andy and I just threw a ton of information at you in regards of understanding the basics of credit and how to keep your credit safe. But we ultimately encourage you to visit our learning sites at citizensbank.com. There are plenty of things to help you learn about saving, managing your debt, and even paying for college when that time comes. We also have our College Bound Learning, College Bound Citizens Learning site at citizensbank.com/College Bound Citizens. I'll put it in the chat. It has a wealth of resources. It comes with the scholarship, of course, understanding your offer letter, comparison tools, articles like having the other talk about who is paying for college and things of that nature. But ultimately, we just hope that we've given you enough information to help you budget, save, build credit, and overall have a strong financial health through your life. And so that concludes our presentation. Thank you for joining us today, but more importantly, thank you for letting us join you on your journey to financial wellness.